Economist, recession, here it comes. This isn't even a funny meme, but I mean, it's true. Economists are always saying there's a recession right around the corner. They just throw this word out every other day, even though we're already in a recession, but we don't know we're in a recession until July, apparently, because that's when the Fed's going to tell us or something like that. But I'm no economics major or anything. Oh, wait, I am. Whatever. Anyway, so today we're going to talk about what is a recession. And I'm not going to lie, team, this is going to be boring as fuck. So I apologize ahead of time because this is just a bunch of boring shit. But a lot of people are asking, what is a recession? What is like the actual definition? Because as you know, we've been in a recession forever. But again, I'm not a financial advisor or anything like that, so I can't even say that, or the Fed, whatever. They're going to tell us next month if we're in a recession or not, but we all know we've been in a recession for quite some time. So the actual definition of a recession is a significant decline in economic activity that lasts for months or even years. Hopefully this one's not years, but that could be cool. Great time to buy a bunch of crap that you don't need and buy a lot of assets so you come out of this a winner. Let's just hope it lasts for a few months, even though it's already been 6 months or so. Experts declare a recession when a nation's economy experiences negative gross domestic product, or GDP, if you've ever heard those acronym before. Rising levels of unemployment. Wow, it's like we've been there for a minute. Falling retail sales again, and conducting or contracting measures of income and manufacturing for an extended period of time. Again, we've been there for the past few years, especially with COVID. Cool. Recessions are considered an unavoidable part of business cycle or the regular cadence of expansion and contraction that occurs in the nation's economy. And it also, just so you know, like recessions suck when you're in it. But they're great buying opportunities. They're definitely needed for any type of business cycle, like they said. Again, it really sucks, especially if you're not prepared. But in the end, it's actually a good thing, even though everyone's out of jobs and people are financially struggling and, you know, barely have food on the table to eat and the government's nowhere near to really actually help you. Weird, but it's a good thing. I promise you guys. All right, so here's the official recession definitions. So I don't know what the other definition was. I guess that was the unofficial, but there's two right here. During a recession, the economy struggles, people lose work, companies make fewer sales, and the economy's overall economic outputs decline. They probably could have just started off with that. In 1974, the economist Julius Shiskin, I like Shiskin. We're going to go with that. The most popular was the 2 consecutive quarters of a declining GDP. A healthy economy expands over time. So 2 quarters in a row of contracting output suggests that there are serious underlying problems. This definition of a recession became a common standard over the years. And the only reason we hadn't had those 2 consecutive quarters now is because, again, the Fed keeps pumping it up and making fake numbers anyways, and especially with the current administration and all the fun stuff they've been doing. Yeah, it's weird. It's almost like, again, we've been in this for over 2 years. But realistically, when the money started drying up, we've been in this since November of 2021. But whatever. Again, I don't know anything about the economy or anything. I just learned what they teach me in school. The Nation Bureau of Economic Research, or EBER, I know you've heard that one before. A significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in a real GDP, real income, employment, industrial production, and wholesale retail sales. I'm going to go with this one because this one makes a lot more sense. The NBER's definition is more flexible than the Shiskin's rule, and Shiskin's rule is back in the 70s, so things change over time. The coronavirus could potentially create a W-shaped recession where the economy falls one quarter, then starts to grow, then drops again in the future. Yep, we already saw that. That was pretty fun. Made a lot of money off of those swings on the market. It was a lot of fun. That's when I actually started swing trading. I don't do it much anymore just because I sucked at it, but I was doing great back then. Anyone could make money back then. That was only 2 years ago. It was a lot of fun. It was the wild, wild west of the market out there, especially with Robinhood. It was like gambling every day. So much fun. Anyways, what causes recession? So these are just basic ones. A sudden economic shock. That's probably the main one. An economic shock is a surprise problem that creates a serious financial damage. This is why you prepare for stuff. You always have emergency funds. You always have money on the sidelines ready to deploy for an opportunity, that type of thing. In the 1970s, OPEC cut off supply of oil to the U.S. without warning, causing a recession, not to mention endless lines at gas stations. The coronavirus outbreak, which shut down economies worldwide, is more recent example of sudden shock. Yeah, I know another one. Probably like when Russia just decided to go after Ukraine, that was a huge one. Again, I don't support the war at all or anything like that, but it definitely sent shockwaves through the entire world. And it has nothing really to do with us, and it's still messed up a lot of stuff today. And this is months later, and it's still causing problems. You don't hear much about it on the news anymore. It's almost like they're trying to distract us with other stuff these days. Excessive debt. Makes sense. When individuals or businesses take out too much debt, the cost of servicing the debt can grow to the point where they can't pay their bills, almost like the Fed and the U.S. government. Weird. Growing debt, defaults, and bankruptcies then capsize the economy. The housing bubble in the mid-aughts, is that a word? That led to the Great Recession is a prime example of excessive debt causing a recession. Or you could just print like 40% of the known dollars in the world in the past 2 years, and then you're like, oh wait, something's wrong. We got to slow down inflation. I don't know, let's increase mortgage rates and all that good stuff. And it will slow down and then, I don't know, put us into a recession. It's almost like they're doing this on purpose. Asset bubbles. When investing decisions are driven by emotion, bad economic outcomes aren't far behind. Investors can become too optimistic during a strong economy. Weird. Again, the economy during the COVID pandemic. Nothing was happening. Everything was shut down. Yet it was one of the strongest economies we've ever had. It's almost like it was fake. It's almost like it's an irrational exuberance. Irrational exuberance inflates stock markets or real estate bubbles. And when bubbles pop, panic selling can crash the market, causing a recession. Wow, it's almost like history repeats itself. And it's all written here. Crazy. Too much inflation. Whoa. Again, okay, I'm just making a mockery of it because this is like common sense stuff. Again, if you're a beginner in finance, maybe you don't realize or see this stuff, but this stuff has been painted on the walls for freaking ever. And it's insane that now we're just like, oh, maybe we're in a recession. But Jerome Powell and what's the Secretary of Finance? What's it? Warren Wellen, that old lady that lies all the time. Yeah, I can't remember. We've talked about her in the past. I don't really care because I don't believe anything she ever said anyways. Just like I don't believe anything Jerome Powell says because they're fucking liars. And guess who they work for? Oh, that makes sense. Too much inflation. Inflation is the steady upward trend in prices over time. Inflation isn't a bad thing per se, but excessive inflation is a dangerous phenomenon. Central banks control inflation by raising interest rates, and higher interest rates depress economic activities. It's almost like I just said that. Out of control inflation was an ongoing problem in the U.S. in the 1970s. To break the cycle, the Federal Reserve rapidly raised interest rates, which caused a recession. Crap! It's almost like they're going to do it again. At least they're following history. 50 years later, and we still haven't learned much. Too much deflation. Well, at least we don't have to deal with this yet, like Japan. Well, a runaway inflation can create a recession. Deflation can be even worse. Yep. Deflation is when prices decline over time, which causes wages to contract, which further depresses prices. When a deflationary feedback loop gets out of hand, people and business stop spending, which undermines the economy. It's almost like it's happening now, but we're not quite there. Japan's struggles with deflation throughout most of the 1990s caused a severe recession. And 30 years later, they still have the same problems. Japan's been trading sideways for like 30 plus years now, and it hasn't changed at all. And now they're having less children born over people dying. So like, what is the population rate is actually dropping, which is insane. It happens though. Technological. It's so early. Technological. New inventions increase productivity and help the economy over the long term. But there can be short-term periods of adjustment to technological breakthroughs. It's almost like crypto or something. In the 19th century, there was waves of labor-saving technological improvements. Why can't I say that? It's not even a hard word. The Industrial Revolution made entire professions obsolete, sparking recessions, hard times. Today, some economists worry about the AI and robots could cause recessions by eliminate whole categories of jobs. They're already doing it. We already see it with Amazon and other, sorry, not to name drop Amazon or anything, because I do invest in them and I have a lot of their stock and I've been doing it for 10 plus years. But yeah, one of those places, and look, it's one of the biggest companies out there. And guess what? People are losing their jobs left and right because of stuff. Whatever. Recessions and business cycles. Again, this is just part of it. really boring stuff. We're just going to go down it and we'll probably just stop because it gets even worse. We go into the history and stuff. The business cycle describes the way an economy alternates between periods of expansions and recessions. As an economic expansion begins, the economy sees healthy, sustainable growth. Over time, lenders make it easier and less expensive to borrow money, encouraging consumers and businesses to load up on debt. Irrational exuberance starts to overtake asset prices. We've already seen all this in the past few years. As that economic expansion ages, assets values rise more rapidly and debt loads become larger. At a certain point in the cycle, one of the phenomenon from the list above derails the economic expansion. The shock bursts asset bubbles, crashes the stock market, and makes large debt loads too expensive to maintain. As a result, growth contracts and the economy enters a recession. It says one, right? Or what is it? One of the phenomenons. Pretty much all of those phenomenons have been happening over the past few months and years. So I'm not going to go further into it, but if you guys really want to read all this stuff, it's a great, it is a good article. It really lays out everything for you. I'll put it in the notes and you can just go check it out. The Forbes always does a great thing explaining things, and really easy to read, stuff like that, easy to understand. So go check it out. But yeah, it's really boring as fuck. So we're just going to stop there. If there's any silver lining, it's that recessions do not last forever. Yes, the bull markets usually last way longer than bear markets that we're kind of in. So remember that. Even the Great Depression ended eventually. And when it did, it was followed by arguably the strongest period of economic growth in U.S. history. And that's what I hope for. Obviously, we don't know exactly what's going to happen, but usually history repeats itself to an extent. We don't know when it's going to switch over, but that's why now is a great time to buy assets. Stocks are cheap. They're at discounted prices. If you're into crypto is extremely cheap. The biggest ones like Bitcoin and Ethereum are down 50 to 60% right now. And then if you are into alternate coins, a lot of those are down 90-95%. Very risky. If you're going to get into those, get into actual good coins and the ones that actually have a purpose, not just, hey, we're just going to hype it, like pump and dump this coin. That type of stuff like Dogecoin. Don't get Dogecoin unless you're really dumb and you really just want to swing trade it like I do sometimes. But again, I'm an idiot. So don't take financial advice from an idiot on YouTube. Just go out there and buy assets right now. And hopefully once this all turns around, you will make some significant amount of money. Hopefully. At the end of the day, guys, remember to keep being awesome and keep loving each other like I love silver linings, I guess.